Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bearish scenario on the daily time frame, where we're looking for a bigger three-wave corrective structure, after which we expect continuation to the upside. In this wave X, we're looking for an expanding flat, a 3-wave A, a 3-wave B, and a 5-wave C towards the upside, which preferably ends before hitting the 2-fib time on the 25th of May. This 2-fib time is taken from the start of A to the end of wave A, comparing A plus B with this wave C to the upside, and a wave C preferably ends before the 2-fib time, and if it doesn't, it significantly reduces the probabilities that this move to the upside is a wave C in an expanding flat. Common target area for your wave X is between the golden pocket and the 886, taken from the high to the low of this wave W, giving you a target area between 68.3k and 72.2k. After wave X, we're looking for a wave Y to the downside. Most commonly a zigzag, can also be a flat structure, and the rarest pattern would be a triangle in this wave Y, after which we then look for continuation to the upside. The second scenario, which also is a bigger 3-wave corrective structure to the downside, is a zigzag with a leading diagonal 5-wave structure in your wave A, a 3-wave move to the upside in your wave B, and then a 5-wave impulsive structure to the downside in wave C, taking the lows at 56k. Common target area for your wave B is between the golden pocket and the 886, but this time it's taken from the high to this low over here, the low of wave A, giving you a target area between 67.2k and 71.9k. Preferably this wave B and also the yellow wave C is ending after the 382 fib time, taken from the start to the end of wave A, comparing A with B in time, sitting on the 19th of May, which is tomorrow. The invalidation for this scenario is price taking the high. Inside wave B, we're looking for a 3-wave structure, most commonly a zigzag, and on the lower time frames we can also count a zigzag to the upside in a 5-wave A, 3-wave B, and then an unfinished C to the upside, where the common target area for your wave C is the trend-based fib extension taken from the low to the high of A to the low of B, the 1 to the 1.236, giving you a target area between 69.1k and 71.3k. In this case, on the lower time frames, we're then looking for a 1, 2, 3, still a sideways 4 over the weekend, a 5 to the upside next week, after which we then expect a continuation to the downside impulsively in this wave C. The most bullish scenario is that your low is in and we're looking for a double 1, 2 to the upside, where the highest degree wave 1 and 2 are already finished, because the highest degree count is the green count in the 1, 2, 3, 4, 5, and inside wave 3 we have the blue sub-degree count, 1, 2, 3, 4, 5 wave structure inside the green wave 3. Preferably in a double 1-2, your lower degree, wave 1 and wave 2, are a little bit shorter in time and price. It's not a requirement, it's not a rule, it's more like a guideline and something that is common, that wave 1 and 2 are shorter in time and price, because naturally it's a lower degree Elliott wave count. Now this blue wave 1 is already longer in time compared to the green wave 1, so that impacts the probabilities at least slightly, but preferably in this blue wave 1 you're not hitting this 1-to-1 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, because then this blue wave 1 would also be longer in price compared to your green wave 1. It's not an invalidation. Also, the fact that blue wave 1 is longer in time compared to the green wave 1 is not an invalidation. It just has a bit of an impact on the probabilities. By all means, if we do move to the upside and hit the 1-to-1, what you want to see in this scenario is a corrective structure to the downside in a wave 2. Lots of overlap, corrective moves, and then continuation to the upside impulsively, while in the ABC scenario, after B is in over here in green, we want to see impulsive structures to the downside, not corrective structures, because wave C has to be an impulsive move to the downside, and most commonly in a wave Y, you're also looking for impulsive structures to the downside, because a zigzag is most common in that wave Y. So the retracement to the downside is going to play a very important role. Locally, on the 4-hour time frame, we are then looking for an unfinished zigzag to the upside in either a wave C in the bearish scenarios or a wave 1. We have our wave 1, 2 in blue, then a 1, 2, 3, 4, 5 inside this blue wave 3, looking for a 4 and eventually another push to the upside in wave 5, where important resistance is the weekly naked point of control at 69.1k. Common target area for your wave 4 is the box here, the blue fips between the 0.5 and the 236 taken from the low of 2 to the high of 3, giving you a target area between 65.9k and 64.1k. The 0.618 is an invalidation for wave 4 at 63.3k. Locally, price has hit the 886 taken from this high to the low over here, increasing the probabilities that any move to the downside locally is a wave C or Y, which in turn increases the probabilities to sooner or later take this high. Now, if we do take the double top over here before hitting the common target area for wave 4, I would be looking for a potential flat structure and then a wave A, B and a wave C to still move down inside the common target area here for wave 4, but that is something we'll have to wait and see. Additional support in this wave 4 target area are 2 point of controls, one at 66.1k and one here at 65.2k. With regards to the CVD divergences, locally we have bullish CVD divergences on the chart, higher low in price, lower low on the CVD, which you can see here on yellow. Higher low in price, but on yellow, lower low on the CVD. And the target for this CVD divergence is price taking out the high over here, which would be in confluence with the 886 touch that we have as well. So if we then look at the probabilities of the different scenarios, then on the daily time frame, it all depends on how high this local structure to the upside goes. If price moves towards the upside in a wave 5 and hits the 69.2k level, the probabilities do decrease slightly for the 112 because your second wave 1 is longer in price and time compared to your first wave 1, even though the second wave 1 is a lower degree wave 1 in Elliott wave terms. The retracement afterwards, however, will be very important as we need a corrective retracement to the downside for a 112, while we want impulsive moves to the downside if this is the high of a C and we're looking for lower prices to come. On the 4-hour time frame here, the 886 locally is touched, so we're looking to take the highs, the double top over here, sooner or later. Would be good, however, to see price also move into the target area for wave 4 before then starting a wave 5 towards the upside, towards that weekly naked point of control. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.